What is going on, my friends, and welcome back to another video on the channel. Well, Polygon Matic has finally made a move that we have been looking for months at this point, and it seems to be in a position to continue this long-term growth and be one of the few movers in this bear market actually seeing some progress. So with that said, let's not waste any time at all, and let's get straight into today's video. Now, we're going to start today's video with a tweet that I put out on September 28th, about 2 months ago, and said, the picture is pretty clear that Matic has made the most advancements and gained the most big name partnerships this bear market. I have zero doubt that it's going to be reflected in the price once things are in a better light. Well, as things are starting to ease up in this bear market, we can see that Matic is now up just from the time that we put that tweet out, which was in September 28th at the bottom of this little move. I mean, this thing is up already 60% and seems like it wants to continue. And so for that reason, let's talk about what all is going on. Why is Matic making these moves and what we can expect from it going forward? So the big move that we have been talking about and waiting for on the channel has been the break above $1.05. What we have to remember is that this was our last strong point of support that we tried to hold before we just mass capitulated to the downside. Not only was it the last point of support that we tried to hold, but it was also a point in which we flipped this previous point of support into resistance. When you have an SR flip, support to resistance flip, it is essential that you get back above that point of resistance before getting too excited, because a rejection off of a previous point of support is extremely bearish. But considering the fact that we did go in, we put in a bit of a reset here. We had the descending wedge, which is usually a good accumulation point in an uptrend, as it's usually a continuation pattern. We got the breakout, we worked our way up, we saw this ascending wedge, and boom, rocket launch out above $1.05. So first and foremost, we need to see this hold, okay? First and foremost, we absolutely need to see this hold. We need to see it stay above $1.05 at this point, okay? We've put in now a high. We've put in now a higher high. We had a low. Now we've had a higher low. Matic could very well be in position to start to see the beginning of a new wave to the top side. I know some people say we're in a bear market, it doesn't make sense, but when you zoom out, again, like we talked about in this tweet, they've got partnerships with Instagram. Elon Musk just said that they were going to be an official partner of Twitter. We could see that Disney brought them on to, one of their systems. I mean, Matic has some of the biggest names going for them right now, and it is reflecting they will likely be top 5, top 6, if I had to guess. So with that said, again, let's talk about what happens now. Well, of course, what we can see is that we are up substantially. From the bottom we put in down here up to the top, we're up about 68%, 21% on the day with a straight up candle, okay? Now, whenever things go this vertical, one thing we have to be quite aware of is that they do not last long, right? They don't stay vertical for long. What we also have to be aware of is that this thing is also approaching its macro bull market to bear market Fibonacci 618 to 786 zone. A Fibonacci of this size is the strongest point of resistance and of bearish liquidity on the top side and bullish liquidity to the bottom side that there is in crypto, at least in my opinion. And what we can see is that sitting at $1.27, we are going to run into the 0.618 Fibonacci support or resistance zone, and the 0.786 Fibonacci resistance zone sitting right around 1.84, okay, $1.84. This zone is highly likely to reject this, okay? The likelihood of us going straight up through this zone is maybe less than 10%, honestly. It's probably not going to happen. Unless Disney just, or Apple or someone says they're buying this thing, I do not see that happening. What's the most likely is that we see some growth, maybe some growth. We come up towards $1.27, see a bit of a pullback, maybe even come back to backtest 105, and then we really start to make this fifth wave to the top side to come try to clear this thing. But the likelihood is we're going to probably see a rejection in this zone. What's good about that is there's a lot of growth that can still happen between here and the top of this zone, and I think that over the long term, with all of their partnerships, we are likely that even if it does hit this, come back, pull back, and then continue, that we are now in a position to see growth on the long term to the upside. I do think Matic could very well be one of the ones to lead us out of this bear market. And so my game plan now at this point is to accumulate into dollar cost average, okay? I have been dollar cost averaging for months on Matic. Every now and then, I'll just make a purchase here. I made a purchase here. I think I had a little bitty purchase whenever it fell below 50, and I plan on just continuing that. I'm not going long on leverage. Understand this. We are in a bear market. Anything can happen. Inflation data comes back and says that it went up way higher than everyone expected, then boom, the whole market's going to fall, okay? So I'm not leverage longing this thing right now, but I am averaging in. I am dollar cost averaging because the clear clearing of this high right here and the new establishment of a macro higher high in a time where we have not seen higher highs in any cryptos tells us that Matic could very well be in position to finally see some strong growth to the upside over the long term again. Whether it's, a pullback does happen first, whether we do see a 20-30% crash, that's totally normal considering the fact that this thing is up from bottom to top. Again, 300%. A 30% correction is not out of the ordinary in a situation like that. But overall, it does seem like we are finally, for Matic, seeing the move that we've been waiting for, and it seems like the time to start really averaging in has come, okay? Remember, again, like I said, I wouldn't be doing anything huge. I wouldn't be making 50% portfolio buys. I wouldn't be tripling my position size. I wouldn't be doing any of that because we are going vertical and we're running into a key point of resistance. So we're likely to see a pullback, maybe even one of this size again, or maybe even bigger. Who knows? It seems more likely to me that we're just on our, our 1, 2, 3, 4th wave right now. It seems more likely to me that we're in this position, right? But you never really know. Of course, we just have to play it out, but it does seem like growth is on the way. And so personally speaking, to let you all know, I am dollar cost averaging from this point forward in a much more consistent manner, expecting growth for the next couple of weeks and maybe even the next couple months. And so with that said, I will continue to update you guys. Once we have a little bit more structure, I will do another technical analysis based video. This one was more fundamental analysis of what's happening here. Just because we don't have structure, all we have is a straight up line, and I just don't like trying to make guesses off of what's going to happen on something like this. What I can tell is that we are extended on the 4-hourlies. We're overextended and getting bearish divergence here on the hourlies. And so for that reason, maybe a short-term pullback will come. But once we get a little bit more structure, I will update you guys maybe in the next day or 2 days. So with that said, that's going to be about it for today's video. If you did enjoy, you can always let me know simply by smashing that like button and subscribing to the channel if you are new. And I will see you all next time. Peace.